What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the New York session Silver Bullet hour on the S&P 500. So let's take a look and see what opportunities are available to us in this hour. We're going to start on the 15-minute chart as always, marking out our key liquidity levels. So we can see the buy side that are already marked out here. We are very bearish, so price is just dumping lower. We've had news this morning and we do have news later on at the open of the Silver Bullet hour as well at 10 AM. So this could potentially drive price even further. Have to go left a little bit to find our sell side. So you can see we've just tickled a bit of sell side here and closed back inside the range. We do have various levels of sell side below us as well, should price decide to start displacing lower. So those are the key levels that I'm interested in. So what I'm looking at here now is price going to start pumping higher back in this range to give us a long position, or is it going to start breaking lower to take out some further sell side and continue with its bearish trend? Drop on the 1 minute. So we have created a bullish fair value gap here as we've swept the low. I wouldn't enter on this. I want to see a fair value gap created in the session. So we're looking for a fair value gap to be created inside the Silver Bullet hour to give us our bias. We can see on the short term time frame, lower time frame, we do have equal highs here, so that would be a nice draw on liquidity in all fairness. If we displace up, we could get a quick scalp to take out some buy side at this point. Very, very short term. Let's see what happens as we scroll into the hour. Okay, so that fair value gap has been filled that was created anyway. We're now breaking below the range. There's no displacement lower, so we are getting close to this sell side liquidity, but we're not displacing down to it. So there's no entry for me here to say I want to jump into a trade to take this sell side out. News has dropped, so this is post news now. It's obviously had no effect. We're basically just grinding lower at this point. So our next swing high for a 2022 model entry will be here. Because we've taken liquidity, if it decides to start pumping, I want to be back inside this range and I want to have broken this high with displacement before I start looking for a long trade. So we have got a bullish fair value gap here. This wouldn't be an entry for me because we're not back inside the range. And we are not breaking structure, so there's no long trade here. So come back, we are rejecting with this candle off the bottom of the range into this kind of order block area. We could potentially start displacing lower now. We've pulled back a little bit, which would give us a bit of breathing space to take an entry to get short, taking this sell side. Volume imbalance was created there, so it was only very, very small. We did leave a volume gap. Price opened lower than what it closed at, so that did leave a little imbalance. Coming down, still no displacement. Okay, so that's a strong reaction here. Broken short-term low, broken this swing low as well with a large candle. And that has left a fair value gap as well. So that is a break of structure here with displacement. We're not able to break back in that range. So I do think that we will take some sell side lower, especially given the fact that we're already very bearish. So I would be willing to take a short trade here. 5 pip stop, 5 handle stop loss, 5 handle take profit. So the take profit would be just taking out that sell side there, which would be quite a nice confluence. Let's see if we get tagged in. Tagged in yet, we've created equal lows here, which if we pull back at this point, that's just extra confluence for a short trade in my opinion. We've engineered liquidity here now above the actual sell side that we already had marked out. See what happens. So we are pulling back. So that has tagged us in now. So we have got engineered liquidity here. We've come back, tagged the fair value gap. Respected the 50% of this fair value gap. So let's take a zoom in look at this fair value gap. I always like to pay attention to the 50% levels. We can see we didn't close above 50%. We literally wicked up, closed below the 50. This candle is pulling away now, respecting the bottom of the fair value gap, so that's a good sign. It is left another fair value gap and a volume imbalance here. Going to take those equal lows. Oh, it hasn't taken them. Come back to entry. So hopefully now that we've created all of this engineered liquidity below us, this is just going to drive down, take that lower sell side and hit our take profit. It's a nice reaction. It's taken that left as a fair value gap. And we do hit take profit. So that was quite a nice trade. The basis of the trade was obviously we broke below the range that we'd highlighted on the 15-minute. Unable to break back into the range with displacement. We tested the range low, pulled away quite aggressively, leaving a fair value gap. Entry on the fair value gap, looking to take further sell side liquidity. We'll see if the price has the energy to drop it even lower. So we're coming towards the end of the Silver Bullet hour now. The Silver Bullet hour ends there. Just kind of grinding today, so there's not brilliant price action. We're going to be up to current time. So we haven't taken that. Did we get a 2 to 1? Not even reached a 2 to 1 there. So the 1 to 1, 5 handles was the trade. Very slow price action this morning, unfortunately. But at least the analysis was correct. Failure to break back in the range, displacement lower, and we were able to take some additional sell side for a quick 1 to 1 scalp. Hope that was helpful, guys. If you have any questions, please leave them down below in the comments section. If you enjoyed the video, please give it a thumbs up. And also, please feel free to subscribe to the channel if you want to see more content like this one. Thanks for watching, and I'll be back again with more market reviews soon.